It is Wednesday, May 27th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another No Jiu-Jitsu, Get Your Ass Kicked at Jiu-Jitsu Wednesday. Hopefully those are coming to an end. Hopefully we won't be having them much more. I don't know, I'm hearing that there are some gyms that are supposedly opening on the 1st of June, so I don't know. In the meantime, between then and whenever my gym opens up, I might just train at one of them. I don't know, but I got to get back to it, man. I mean, I'm losing my grips, I'm losing my muscle. Although I will say, I feel like my conditioning has actually improved slightly, and I think it's because of these nighttime supplementals that I've been doing, where pretty much everybody goes to bed and I'm without any disturbance or interruption, and I just go at it for an hour or so. And man, the other night I tore it up. I tore it up so bad that I'm still kind of sore from it. I mean, and it was funny because I had no idea of when I actually finished it, because I've been doing the just going as long as I can on it, and then at the end I'll do like some sort of yoga, just a little bit of yoga, and I'll do some stretching and stuff, and then end it off in shavasana, and yeah, that's been a really good program for me so far, and like I said, I feel like I'm actually getting a little bit stronger, so I don't know. It'll be interesting. I mean, nothing can really train you for dealing with another person except dealing with another person, and that's just my feeling on it. You can get a lot of good ideas from books. You can get a lot of good ideas from videos, but without a live person there to actually go through it and feel the physics of the movement, and feel why you do certain movements at a certain time in reaction to a certain thing, you need that counter pressure there showing you that you can't do that because there's a body in the way. You can't just imagine that the body doesn't exist there and that you can reach your arm right through it. It's not how it works in reality. So yeah, I'm as eager as I could ever be about something to get back to having people try and choke me, which I don't really understand. It's got to be some sort of masochistic thing. But yeah, I'm looking forward to going back to training. But it's allowed me a lot of time that I really need, and I'll be honest about that. Is that I've had a few projects that I've been doing on site, and every time I have to leave the residence, I have to take myself away from it. And as much as I like doing jiu-jitsu and whatnot, I still do have a lot of shit on my table as far as stuff to handle and take care of. So, yeah, it's kind of an opportune time, I guess. Hopefully it'll also mean that not as many people are investing in greenhouses this year, and the materials will be relatively cheap. Although, I don't know. I think that a lot of people are going to be planting stuff. Shout out to everybody in Minneapolis. Don't get all freaky, people. And also in Los Angeles. I guess there's some shit going on out there, and I know that was like a major diversion. It felt like I just added it in afterward, but it just came up in my mind that I wanted to give a shout out to y'all. Take it easy out there. Somebody fucked up. They got fired. Hopefully they go to prison and get dealt with, like any other criminal. But torching private businesses, that's not going to solve anything. And I know you might feel like that's like some sort of vengeance. But yeah, the guy at AutoZone didn't do anything to strangle that guy yesterday. So yeah, taking it out on him is not exactly the greatest thing to do. Anyway, let's go ahead and throw down with some music, because that's about all I got for an intro. But yeah, as far as where we're going to start, I think this one's kind of pertinent Body count. No lives matter. First stance. Here on... Well, no, I don't... fuck it. Let's go hard in the paint. And that was Prong with Get a Hold of Yourself. Actually, I should have let that run, man, because I really like Megadeth The Conjuring, and it would have been kind of in line with where we were going with that. But, no reason to dwell. Gotta get on with some stuff. And so, I just got on Gab. And if any of you guys are on Gab, man, give me a follow. I'll follow you back. I typically do that. Let me see if I'm 100% up on follows to followers. Yep, that's what's going on right now. I'm following quite a few people, and all the people that I'm following are following me. So it's a bit like Twitter to begin with, you know. And I really hope that they retain this ideal of... Wait a minute, it's showing me that I've got 0 followers. Oh, that's weird. Oh no, those are follows. Those are people that I'm following. Never mind. It's slightly more confusing than the setup for Twitter. But I don't know if it's actually going to catch on like Twitter did. I hope it does. I don't think that the necessity to upgrade to Pro is necessarily going to be good for them in the long term, especially if they're not really set up to provide any real premium. Anyway, as far as what we're going to get into today, I've got a few things already selected, and this one it's kind of hilarious because I want to say about maybe a year, maybe 2 ago. I don't know, close to about 2 years. Well, at least a year ago. There was all this fucking jibber jabber about Libra and how, it's going to fucking destroy Bitcoin because it's fucking Facebook and we've as of yet failed to realize that in any kind of reality. And it seems like Libra has nothing but lost all of its supporters. I won't be surprised if in the not-so-distant future Facebook itself fully disassociates itself from the Libra project. I mean, they started out with I want to say it was 22 or so organizations that were signed up, including MasterCard and Visa. And just the wall of regulatory friction they were facing was so huge because of the different jurisdictions that Facebook is available in and that Libra would be available in, that all of the regulatory considerations they would have to make would be so huge that they really couldn't afford to do it. So anyway, they've had since then lost almost all of their original supporters. Visa, MasterCard, all of the payment associated people, all of the bank associated people, they all bailed. And I think they had 8 supporters left. And yet here we go. They lose yet another one. And this one is kind of important because Calibra is kind of I guess they were the issuer of Libra or something like that. But they were deeply entrenched with the Libra project. I can't remember exactly to what depth. Hopefully it'll be mentioned in this article here. Let me get a knock off this really quick. Hold on a moment. Coffee. So anyway, this is on Cointelegraph.com. Calibra rebrands as Novi to avoid, or Novi, to avoid confusion with Libra. You can't make this shit up. It's fucking hilarious. Facebook-owned digital wallet Calibra rebranded itself as Novi earlier today, sharing new details about the project. The primary reason for the name change was to avoid the confusion with the Libra cryptocurrency, a representative for Novi told Cointelegraph. Quote, When we announced Libra and Calibra last June, we wanted to demonstrate that Calibra, the digital wallet, was closely linked with Libra, the global payment system. Both brands were born out of the same vision, to give people more access to the global economy. However, we found that Calibra and Libra sounded too similar and people were getting confused. So, we set to create a distinction between the two. The new name, which comes from the Latin words novus for new and via for way, intends to signal that Facebook-developed product won't be the only wallet available on the Libra blockchain. Quote, "We hope that Novi will be one of many wallets," the spokesperson said. In other words, we hope to infect many systems. Asked about the timetable for launch, the representative said, quote, "Our hope is to introduce an early version of Novi when the Libra network is available, and we have secured all the licenses or approvals necessary to offer the services." According to the official press release, Novi will be released as a standalone app, as well as be integrated into Messenger and WhatsApp, two Facebook-owned messengers boasting around 1.3 billion and 2 billion active users, respectively. All customers will be asked for a government-issued ID, while, quote, "fraud protections will be built in throughout the app," a move that seems to stress the company's compliance in the light of the regulatory scrutiny surrounding Facebook's cryptocurrency project. Although the wallet's new design is supposed to, quote, "represent the fluid movement of digital currencies," it does not currently plan to cater to any cryptocurrencies other than the Libra coins. These are represented by single currency stablecoins like Libra USD, Libra EUR, and Libra GBP. There's also a multi-currency coin called LBR. Libra has been making adjustments. Earlier this year, the Libra Association introduced a number of changes in a bid to make the project more attractive to regulators. It applied for a payment systems license from the Swiss financial regulator FINMA and updated its white paper to introduce a more compliant roadmap for Libra's future, essentially limiting what users and hosts can do on the network. To further cement its commitment to abide by crypto regulations, the Libra Association has gone on a hiring spree, tagging in compliance veterans like Robert Werner and Stuart Levy. Werner's resume boasts names like Financial Crimes Enforcement Network, Goldman Sachs, and Merrill Lynch, while Levy was the chief legal officer for HSBC Holdings. You know what's funny about that? The only entity that was mentioned here that, to my knowledge at least, has not been part of a major regulatory breach as far as like compliance goes and whatnot, FinCEN is the only one. Goldman Sachs, Merrill Lynch, HSBC, all of them, all of them have been implicated in major frauds. But yeah, I think this is really hilarious because if you look at the aspiration there with regard to Libra, they're basically wanting to create in themselves some sort of exchange where you're exchanging like US dollars for Libra USD. And the Libra USD will be exchangeable for Libra EUR or Libra whatever, right? And somehow or another they're managing all that around in the background, and we're supposed to trust them with that. And see, this is where they really run into the problem with regard to cryptocurrencies, because there have been people trying to claim that Libra is somehow a cryptocurrency, or that the Libra Euro, Libra USD, all that is somehow tantamount to things like stable coins, which are in and of themselves, I believe, nothing more than a counterfeiting scheme. You know, that Tether doesn't really have the money. You give them the money when you spend your US dollars for USDT or Bitcoin, and then for USDT or whatever. You give them the money. They don't actually have it. And this is why they run into so many banking difficulties. And it's one of the reasons why I don't trust them, and why I feel that eventually they will be caught out, and that they will kind of fuck up a lot of people. Stablecoins have been one of those things that I've always considered to be fraudulent at their core, and there hasn't been a single one of them that has actually had a full audit of their cash reserves. But if you look at the way that they're created, it's just as possible that they don't actually have any money at all, and that the money that you give them is the only money that they have. Now, whether they keep that money as reserves or piss it away on boats and hoes, we have no idea, because there's never been an audit of their reserves. And as far as iFinex and Bitfinex and all those guys are concerned, I really feel like they're basically like mercenary forces for the Federal Reserve. It's like the U.S. State Department has mercenary forces that go around and do shit for them. Well, the Federal Reserve has mercenary forces that go around and do shit for them too. And one of the things that they're doing, at least in our markets, in the cryptocurrency markets, is introducing fraudulent tokens that nobody's bothering to monitor, nobody's bothering to really regulate. There hasn't been a single stablecoin that's experienced any kind of regulatory friction, despite the fact that all of their white papers are full of fraudulent claims and a whole bunch of bullshit that they cannot possibly do. But, you know, somehow or another they manage to convince the regulators that they can just back off, right? But when you look at the entities that are involved, it's like you've got GUSD, that's from Gemini. And of course they've got their little FinCEN license, but they're one of like maybe 20, maybe 30 entities on the planet that has a bit license. You know, I mean, basically what I'm getting to is that these guys are all legacy bankers investing in one another's projects and pumping one another in the face of what is sure to be a major collapse in the fiat markets. You know, they're preparing for it. It's kind of obvious to anybody that's really been watching this space for any significant duration of time. You know, I won't be surprised if we start seeing, what's that guy, Larry Summers? I want to say his name is Larry Summers, but there's this one guy who's involved in another major scam. Like, I want to say it was like it was either in the SNL crisis or the Enron thing. And Larry Summers, I want to say it's Larry Summers, but he showed up in crypto not too long ago, like back in I want to say like 2015, 2016. And it's like when I saw that, I'm like, okay, they're bringing out their mercenary core now. You know, I mean, and when you look at who's been involving themselves in crypto, you see the big names. Okay, you see Merrill Lynch, you see Goldman Sachs. These people are like CIA agents. They are never not a fucking Goldman Sachs employee after they leave Goldman Sachs. You know, like when they get hired at like the Federal Reserve as the Federal Reserve chair, or in some big regulatory seat in the executive branch or whatever, they don't stop being a Goldman Sachs employee. They're always a Goldman Sachs, a company man, so to speak. And the same can be said for, you know, when you look at the other ones like J.P. Morgan or any of those guys. Anyway, I got this next thing here. And it's on the American Institute for Economic Research, AIER.org. The Ides of March 2020, when bank regulation failed. And this is by Warren C. Gibson, and it was authored May 23rd, 2020, so a few days old, not too old. But yes, penis. On May 20th, the Wall Street Journal published an eye-opening piece, quote, "The day coronavirus nearly broke the financial markets," with the subtitle, quote, "The March 16 stock crash was part of a broader liquidity crisis that threatened the viability of America's companies and municipalities." You may remember that Monday, that Monday, as the day the Dow Jones Industrial Average plunged nearly 13%, the second biggest one-day fall in history. Quote, "Few realized how close it came to going over the edge entirely," says the journal. "I certainly didn't, and I highly recommend reading the whole article." The day's rout had threatened money market funds, a scary prospect indeed, since investors count on those funds to provide a steady $1 share price and near instant redeemability. Institutional holders of money market funds were bailing out, requiring fund managers to dump bond holdings to raise cash. But there are almost no buyers. Panic spilled over into municipal bond markets, which ground to a halt for a week or so. Books will be written, and likely are being written at this moment, about the week of March 15th. I merely want to follow up on a couple of paragraphs in the journal article because they show vividly how government regulations sometimes produce results that, even from the point of view of the regulators, are disastrous. Ludwig von Mises, where are you? I refer here to the increased capital requirements that were imposed on banks following the 2008-2009 financial debacle. When a new bank is formed, investors provide capital to get things started. As the bank grows, it makes loans that are recorded as assets and accepts deposits that are liabilities. The amount by which the assets exceed liabilities is the bank's capital, and that amount varies from day to day. If liabilities should ever exceed assets, the bank's capital would be wiped out and it would be insolvent. This is the essence of banking today. Today's big banks are a lot more complicated than this summary suggests. New rules increase the amount of capital that banks were required to hold relative to liabilities. The Fed had met in an emergency session the day before, a Sunday, the Ides of March to boot, and had announced that it would slash interest rates to buy up to $700 billion in bonds. It is not clear whether that announcement saved the markets or spooked them. What is clear is that a particular side effect of a particular regulation made things worse. There were no buyers for the assets that money market fund managers and others wanted to sell. Why? The assets in question were not junk. They were seemingly sound loans made to businesses and local governments. One institutional trader, Vikram Rao, called senior executives at several big banks to ask them why. It seems that a bunch of complex securities called interest rate swap contracts had swung sharply in favor of banks who were parties to them. The bank's counterparties had locked in super low interest rates on future debt sales, but when rates fell even further, they suddenly owed additional collateral. That collateral was immediately booked as a nice profit for the banks. Good for the banks, right? Wrong. The new assets caused some banks to bump up against their capital limits. The increased post-2008 limits were intended to strengthen banks and lessen the likelihood of future bailouts. A good example of wise regulators forcing gunslinging bank managers to cool down? It might have seemed that way, but when the rules make it impossible for a bank to make sound and reasonable acquisitions of new assets because they are up against their capital limits, things can go badly awry. Especially when those acquisitions might have staved off panic in the financial markets. That's what happened on March 16th. Mr. Rayo got the same answer from all his banker contacts as to why they couldn't buy any of the sound securities that mutual funds and others were panic selling. There was no room to buy bonds and still remain in compliance with tougher guidelines imposed by regulators after the previous financial crisis. Again, this is only one aspect of a complex series of events that unfolded during those March days, but it does show rather vividly how well-intentioned regulation can go awry. You and I, paragons of financial prudence, keep 6 months living expenses in cash, right? But you know what? Not everybody does. Politicians force us to send our children to school, force us to buy health insurance, force us to pay into the rotten Ponzi scheme called Social Security, force us to build our home deck railings with openings between verticals not exceeding 4 inches. If all that is okay, why shouldn't our nanny government force us all to maintain cash reserves? Now, supposing we were never allowed to touch that reserve, even in a sudden crisis, what kind of crazy reserve would that be? Preposterous, but that's how unbending capital requirements worked out in the banking system on March 16th. Yet, when the story of that week is written, Elizabeth Warren and her ilk will just slant it as just another market failure calling for more and stricter regulations. As Mises taught, those regulations will trigger still more unforeseen problems, and the cycle will continue unto full socialism in banking. Actually, it's going to do worse than that in our economy because we have outlets called cryptocurrencies. Unless the tide is turned, we must oppose all banking regulation. Punish fraud and theft, but otherwise laissez-nous faire. Put the onus back on bank managers to exercise prudence with regard to capital banking and other practices like reserve levels or purchase of deposit insurance. Let them earn reputations for sound banking that we small fry can actually rely on. To be sure, today's managers don't want that onus, quite comfortable as they are behind regulators' skirts, but it's the only way out of the spiral towards full socialization of banking. Yeah, that is really interesting, and it is a bit of an issue. But I think the bigger issue that we're facing now is that a significant percentage of the economy is people that are attached to the internet. And those people, all of them, well, virtually all of them, those of us who aren't still on dial-up, are capable of participating in systems that don't require any interface with the bank or its friction or its regulation at all. And this is a really big problem for them, because the whole banking system has been set up on exchanging value in terms of they give you a debt that you can purchase and you put that out there and you buy things with it. And that makes it worth more, right? Because somebody was willing to honor it as money. Well, the same thing will happen with cryptocurrencies. When you can no longer escape any kind of taxation or regulation, and you got people reaching up your ass at any fucking point and every point possible, and yet you could just as easily disassociate entirely from that. That's exactly what people are going to do. Now, whether that's an intended result where they're wanting everybody to go to cryptocurrencies or not, I don't really think it is the intended result. I think the intended result was that we were all going to be on some mono global currency by now, and that we wouldn't have any choice but to use that particular currency, or we wouldn't be able to purchase or sell things. And yet we're being put in this situation where we actually need to be able to sell things and buy things that nobody knows we have. And that's how you create advantages in the market, is being able to buy and sell things that nobody knows you have. This creates the surprise and the dynamism in the market, because nobody knows if you're holding cash reserves, liquid reserves, that you're going to be able to tap at some time when you're, say, disadvantaged, maybe like in this market right now, where you might be disadvantaged in most markets, but you do have available means to transact within. And they stay within the regulated market, and they experience all that friction. And in the meantime, Charlie's getting bigger in the jungle, getting stronger, taking more and more of the business away from the open air global, fiat system market. And I characterize it as a decoupling, where all that you're going to end up with is like state entities that have been taken over by the state, and private entities that have been pretty much assumed by the state via the Federal Reserve, having purchased most of their stock. You'll have that system, but it won't be the system that's moving the majority of the money around, because there'll be another system. It'll be composed exclusively of cryptocurrencies, and it will be significant enough that the shippers and the package deliverers will be willing to honor it. Meaning that they will they will ship the packages and whatnot, because they are being paid in cryptocurrency to do it. And they'll do it without it being taxed, and they'll do it without it being regulated, while the rest of the regulated market slowly collapses around us. Because that'll be the only place where the laws are effectual. The only place where it's necessary to honor them. And like I said, I don't know that that's an actual intended result, but that's kind of where I see things going. Because that's where it's gone, how it's gone in other places, like Turkey, Greece, the list goes on, Somalia, Venezuela, where these individual municipalities have lost the trust in their national government to manage the currency, have lost the confidence in their central bank to manage the currency. They migrate over to cryptocurrency, they're able to do their daily business in it. They have no use to be able to interface with the fiat currency system at all. And that's not a product of their desire to do so. It's a product of the necessity for simple survival being created by the regulatory frameworks being erected around them by other people. Anyway, let's go ahead and throw back down with some music. And as far as where to go, I wanted to play some Periphery last time around, and we never got to them. I think we should resolve that. And so, yeah, Follow Your Ghost by Periphery here on Coin Metal. And that was Meshuggah with Marrow. Yeah. My apologies there. I just, had to take care of something. Anyway, as far as what else we are going to get into here, come on there, I want to get into, may or may not. This is one I've been watching, and it's funny because it doesn't seem to go away. And personally, I think this is an expression of the expectation of the market to participate in cryptocurrency, But there have been several misperceptions, I should say, created concerning cryptocurrencies, and one of them is some sort of like hatred towards miners, which I just do not understand. I mean, because without the miners, you don't have the networks, and without the networks, you don't have the block rewards, i.e., the coins that you're spending, right? And like I said, I think there's been a lot of effort put out there to distort the public's perception of exactly what cryptocurrencies are and what they're meant to do and how they're meant to operate. And with that end, we're seeing that things are turned around to where people are wanting to mine, but because of these misperceptions, they've decided to go about it in untoward ways. And I believe that we're going to consistently see this again and again until we have an elimination of some of the distorting things with regard to the valuation of cryptocurrencies. See, personally, I believe that cryptocurrencies are worth a lot more than they currently are in the markets versus fiat currencies, and that this will change over time, and especially now when we're seeing so much liquidity being brought out to the banks, that's eventually going to express into the market at large, and as it does, it's going to devalue the existing notes in relative terms. And this is where we are going to see a continuing increase in relative terms of value in cryptocurrencies versus fiat currencies. And people, I hate referring back to this because, there is so much miscommunication when it comes to this concerning cryptocurrencies, is that when you're looking at a quote-unquote price of a cryptocurrency as denominated in a fiat currency, what you're actually seeing is the exchange rate between two independent currency systems. It's an exchange rate. It's what people were willing to exchange their cryptocurrency for in terms of fiat currency. And this in itself is just in the market at large. It's not necessarily the exchange rate that you and your business partners could decide to agree upon. That's completely independent. Anyway, I got this article here. It's on Cointelegraph.com. It's by Felipe Irezo. So yes, penis. 1,000 corporate systems infected with Monero mining malware. This is good. And this is supposedly written 35 minutes ago, but let me reload it just in case. May 27th, 2020. So apparently a few hours ago. The Blue Mockingbird malware gang has infected more than 1,000 business systems with Monero mining malware since December 2019. The global scale of the hacker group's operations was revealed by cloud security firm Red Canary on May 26th. The report outlined the group's methodology. The malware attacks servers running ASP.NET applications and exploits a vulnerability to install a web shell on the attacked computer and obtain administrator-level access to modify the server settings. God damn, dude, have you ever heard of a fucking comma? Next, you got a fucking comma in there. Next, the cyber criminals installed the XMR rig application to take advantage of the resources of the infected machines. Most of the infected computers belong to large companies, though Red Canary did not reveal any names. Remote desk RDP. It's a fucking RDP exploit. Remote desktop protocol vulnerabilities. As with recent ransomware attacks using Trojans, criminals took advantage of the weaknesses of the remote desktop protocol in Windows to penetrate systems. The report highlights that although it is difficult to quantify the total number of infections, these attacks occurred in a relatively short period of time. Red Canary also warns that companies that believe themselves to be safe from such attacks are actually at high risk of their security being breached by the malware infection. Speaking with Cointelegraph, Brett Callow, threat analysis analyst at Malware Lab MCSoft commented on the current vulnerabilities of systems to such attacks. Quote, Cybercriminals specifically seek out weaknesses in the internet-facing systems and, when found, exploit them. Companies can significantly reduce their risk factor by following well-established best practices such as timely patching, using MFA, disabling PowerShell when not needed, etc. If those best practices are not adhered to and the internet-facing servers are left vulnerable, it is significantly more likely that a company will experience a crypto mining ransomware, data exfiltration, or other security event. Related are recent XMR rig-related attacks. The use of the XMR rig app for unauthorized crypto mining is a recent phenomenon that has been used by various groups of hackers. Cointelegraph reported in November 2019 that a malware targeted vulnerable Docker instances to deploy the Monero mining app. In the same year, reports published by the cybersecurity companies Symantec and BlackBerry Cylance warned about the injection of XMR Rig app into computers through music files. Oh gosh. These guys are getting fucking creative. Now, what bums me out about this is that they're making these hyper lightweight mining apps, right? Why not just offer them available to everybody? And why not just publish it out to everybody to say, yo, man, get in on our mining app. Get in on our mining pool. Get in on mining. No. We can't do that. We can't ask for your willing participation. No, we've got to fucking hack our way into your corporate systems, infect them, and utilize them as miners. I mean, really. What I'm seeing here is a discrepancy between the access to hardware necessary to entertain these hackers and an incentive to purchase it and participate in mining. You know, the incentive is greater for them to cheat, to utilize their intellectual capabilities to cheat. Now, why is that? What is the one thing that has really changed over the last 3 or 4 years? Oh, right. It's the involvement of governments in trying to regulate cryptocurrencies. And as predicted, the market is reacting in negative ways. President Trump, you've been talking about waiving all kinds of restrictions on the market to allow the economy to grow and help people out, let people get back to work, let people get back rolling. You want to repeal regulations that are inhibiting the growth of the market? There you go. Start in finance. It's going to fuck your fiat systems, but you know what? They're already fucked. You're still going to be able to deal with it, though, because it's worth it to enough fucking people for it to continue to function, for it to function. As soon as that stops being true, that case may change. But currently, it's useful to enough of us out there that have access to legacy banking and all that, that it will continue to operate. Nonetheless, the market needs other avenues to express in, because between state, federal, and city and municipalities and all that, and counties and all that, all these regulatory layers are choking the ability of the economy to grow. And specifically with regard to finance, what I'm seeing now with regard to how crypto is trying to develop is that we're developing in the wrong way, in that many of the people that are trying to involve themselves in this space are trying to create in themselves a necessary gateway that people or like, garden party, that, only people that have our token can participate in the garden party and everybody else can go fuck off, right? And see, the problem with that is that you end up with this tribalism, because people devote their mind and their effort to this one project, and by golly, they've invested themselves into it, and so it's got to be worth more than everything else, right? Wrong. Completely fucking wrong. You've got a decade behind you of people experimenting in this space. If you want some sort of perspective on it, go back to my fucking YouTube channel. I've been posting episodes since 2016. And you can go back and you can get an idea of what the crypto market was like back then versus now. And you can go back to the predictions and warnings that I gave then and contrast them versus what's going on right now. And you can see, I've been calling it. I've been telling you fucking people out there, and, through all kinds of censorship on Twitter and whatnot. I'm not going to go into that. I'm not saying it's something that we need regulators involved in or something like that, because really I don't think that's going to help the situation. But what I'm saying is that, for whatever reason, and maybe it's because I play metal, or people don't like my voice, or don't really like what I'm saying because I'm shitting on their project, and they're really not getting the bigger message here. The bigger message that I've been trying to give out in this show is this: don't give up on trying. Keep trying. But refer back to what other people did first, because a lot of people have been wrecked in front of you. There's really no reason for you to go through it yourself. Look at what they did. Look at how they dealt with problems. Look at the problems that they were actually facing, not just the ones that they were experiencing on the whiteboard that they were drawing up their little schematic on. You can imagine all kinds of threats, but you can't imagine all of the threats that are out there. You can't imagine all of the ways that they can express. I try on this show, and even as imaginative as I am, I know that I'm kind of limited in some ways. There's some projects I completely fucking ignore them. And why? Because I don't believe that they're useful over the longer term. I believe that they have little tweaks in their incentive structures that over the longer period of time are going to make them vulnerable, are going to make them susceptible to attack, and are going to harm a lot of fucking people out there that grow dependent upon it. And we can see the problems with developing dependency structures with what's going right now with the shit down. And that's what I've decided to call it. Where we've crippled economies, where people have had supply flows that they could go to certain vendors, they could get certain, that's all been fucking upended. They're having to redraw that whole scheme of where they get what to keep operating. But anyway, as I've been saying a long time on this show, that I think in times like this, when we do have a fracturing of our current value systems, that having cryptocurrencies in place that we can participate in and we can keep the world economy running on, that they will serve their purpose. That we've been ready for you guys since 2012. We could have taken care of all this shit since 2012. Without a block size limit, Bitcoin would have sucked up the majority of this. But, hey, we make mistakes and we go on. Now, like I said, I think that a lot of the things that we've tried to do since then to right the ship, with the development of altcoins and ICOs and all that other shit, that there's things that when you get away from the network aspect of it, where you're not participating directly on the network as a node on one of these networks mining. When you get away from that, again, you imbalance the incentive structure behind them. They're supposed to be the result of your confidence and your desire. Not necessarily what the guy next to you is doing, but something that is valuable to you. And when it no longer satisfies those values, that you either A, try and fork it, or B, move on and do another project that does fill your suit. And the problem with a lot of cryptocurrency and a lot of what's going on out there right now is there isn't a need for a lot of the things that people are developing. There really isn't. There's imagined need because there are these dependency relationships existing in legacy finance. So again, they're trying to create those legacy lattices here within crypto. And the problem with that is that all of it is dependent upon what you and I decide to use. Not just which cryptocurrency we use, but which variant, which implementations we're exercising with our hardware. So like with Bitcoin, you've got BIPs that you can flag support for or not. And see, I think that's one aspect of Bitcoin that hasn't seen enough emphasis or exercise, is that at any time, if a majority of miners decide that they want to mine a certain way, and I believe the threshold is like 95%, it might have actually been reduced by Blockstream, but that there's a threshold to be reached whereby the protocol can be changed. And of course everybody else has to vote on it, and they do have to hit a consensus for, and I've forgotten all the details as far as like the duration of consensus before it actually implements across the line. I don't know. I've forgotten a lot of that crap. But the point being is that so little emphasis has been put on that. A lot of emphasis has been put on what can you build on top of it. And like I said, over the longer term, I think that these attempts to rebalance the incentives, they're going to create points of failure. Like I'll give you an example. Lightning Network. Now, I've given loose descriptions of the type of attacks that could go on with Lightning Network. But the way that it alters Bitcoin transacting is a bit of a liability. And it's not been exploited yet. Well, at least not on a really broad scale. But the fact that those threats do exist has inhibited a lot of growth with regard to Lightning. And I think that in the longer term, people are going to be made aware of what that threat is and how it actually threatens their money. But yeah, so getting back to what we were talking about originally, 1,000 corporate systems infected with Monero mining malware. Yeah, that's coming to an IoT device near you. And yeah. Let me see if I can find this actual paper here, because I went on the article that it relates to here, and let's see, find the Ides of March. No, there we go. There was a link on this Cointelegraph article, and I thought it was directly to the report, but apparently it's just to a ZDNet article referring back to it. Let me see if I can find the actual report. NSA, published in Austrian, no. Red Canary released a report. There we go. Let's see what this thing is. Alright, so this is on redcanary.com. And, yeah, let's go for it. Introducing Blue Mockingbird. And this is by this dude, Tony Lambert. So, yes, penis. This is on May 7th, 2020. Detection and response. Introducing Blue Mockingbird. Red Canary Intel is monitoring a potentially novel threat that is deploying Monero cryptocurrency mining payloads on Windows machines at multiple organizations. Blue Mockingbird is the name that we've given to a cluster of similar activity we've observed involving Monero cryptocurrency mining payloads in dynamic link library DLL form on Windows systems. They achieve initial access by exploiting public-facing web applications, specifically those that use Telerik UI for ASP.NET, followed by execution and persistence using multiple techniques. Check out my colleague Jesse Brown's new blog for details on Blue Mockingbird's core_profiler persistence mechanism. During at least one incident, the adversary used proxying software and experimented with different kinds of reverse shell payloads to connect to external systems. The earliest Blue Mockingbird tools we've observed were created in December of 2019. Gaining entry. In at least 2 incident response engagements, Blue Mockingbird has exploited public-facing web applications. T1190 exploit public-facing application that implemented Telerik UI for ASP.NET AJAX. This suite of user interface components accelerates the web development process, but some versions are susceptible to a deserialization vulnerability, that being CVE 2019 18935 or 18935. The exploitation of the CVE is not unique to Blue Mockingbird, but it has been a common point of entry. In exploiting this vulnerability, 2 DLLs are uploaded to a web application, turning on a Windows IIS web server. In telemetry, investigators will notice w3wp.exe writing the DLLs to disk and then immediately loading them into memory afterward. In some cases, this will cause w3wp.exe to temporarily freeze and fail to successfully serve HTTP responses. For a diagnostic to determine whether you are potentially affected by the Telerik CVE, you can search the IIS access logs for the string post space telerik.web.ui.webresource.axt. In victim environments, our IR partners found entries similar to these, and it gives us a couple little examples. And it looks like they're occurring on Mozilla, so Firefox specific. In the entries, the string 200 refers to response code 200 where the post request was successful, and the string 500 refers to the HTTP code 500 where the post request was not processed successfully by the web server. These code 500 entries happened when the w3wp.exe process loaded the uploaded DLLs into memory and temporarily froze. Let me hit this water really quick. Searching the IIS access logs for entries like these is a good idea, even if you don't explicitly know whether you use Telerik UI, as some web applications require the suite as a dependency behind the scenes. If you have endpoint detection and response, EDR, or similar tools, you'll notice cmd.exe or other suspicious processes spawning from w3wp.exe. Execution and evasion. The primary payload distributed by Blue Mockingbird is a version of XMR-Rig packaged as a DLL. XMR-Rig is a popular open-source Monero mining tool that adversaries can easily compile into custom tooling. During the incidents, we noticed 3 distinct uses. The first was execution in run-dll32.exe, explicitly calling the DLL export fac-aaxv, that's T1218.011 run DLL32. This export seems unique to this actor's payloads and doesn't seem to happen in other places in the wild. Run DLL32.exe, dial ogen.dll, fac-aaxv. The next use was an execution using regserver32exe using the /s command line option. Supplying the /s switch executes DLL register server export exposed by the DLL payload. This export ultimately passed control of execution into the function that fac-aax exported. regserver32exe .exe/s dialogex or gex.dll. The final execution path was with the payload configured as a Windows service DLL. Once configured, execution of the service invoked the export service main, which again passed control to fac-aaxv. Come for the exploit, stay for the mining. Blue Mockingbird leveraged multiple techniques for persistence during incidents. The most novel technique was the use of core_profiler COM, hijacked to execute a malicious DLL and restore items removed by defenders. Component object module. To use core_profiler, they used wmic.exe and Windows registry modifications to set up environment variables to specify a DLL payload. Oh, and it gives us a nice little list of the strings. The payload DLL specified as core_profiler was simple and gathered few antivirus detections. It executed the following command, and it gives us a whole list of commands that it did. Since core_profiler was configured, every process that loaded the Microsoft.NET Common Language Runtime would execute the command above, reestablishing persistence. Oh shit, so you can't really remove it. The command configured was the Windows Problem Reports and Solutions Control Panel Support Service to execute automatically at boot. In a separate command, the actor modified the existing WRCLL support service to use the minor DLL instead of the legitimate one. I don't see it adds it to the registry. HKey. Yeah, I'm not going to read it all out. Note that the actor used the DLL name workcpl support e.dll as an attempt to masquerade as the legitimate DLL name, which is were CPL support, no E there, .dll. In addition, more masquerading was used to make malicious scheduled tasks blend in with legitimate ones. In some cases, the actor even created a new service to perform the same actions as the core underscore profiler payload. Escalating privileges and accessing credentials. It is worth noting that Blue Mockingbird's initial access does not provide the privileges needed to establish the many persistence mechanisms used. In one engagement, we observed the adversary using a juicy potato exploit to escalate privileges from an IIS application pool identity virtual account to the NT authority / system account. Juicy Potato allows an attacker to abuse the SE impersonate token privilege and Windows DCOM to move from an unprivileged account to the highest level of privilege on the system. During this engagement, the attacker abused a DCOM class and leveraged the IIS application pool identities SE impersonate privilege to perform the escalation. In another engagement, we observed the adversary using Mimikatz, the official signed version, to access credentials for logon. Free to move around the network. As with other adversaries that mine cryptocurrency opportunistically, Blue Mockingbird likes to move laterally and distribute mining payloads across an enterprise. We observed Blue Mockingbird move laterally using a combination of remote desktop protocol to access privileged systems and Windows Explorer to then distribute payloads to remote systems. In some cases, scheduled tasks were created remotely with scheduled tasks.exe/s to ensure execution. A look at command and control. A novel aspect of this adversary is their toolkit does not appear to be fully defined. In at least one engagement, we observed Blue Mockingbird seemingly experimenting with different tools to create SOX proxies for pivoting. These tools included a fast reverse proxy, FRP, secure socket funneling, SSF, and Venom. In one instance, the adversary also tinkered with PowerShell, reverse TCP shells, and reverse shell in DLL form. Take action. We've scratched the surface on the XMR rig DLL payload, but we can dive deeper to understand more details. And that's TI 1496 resource hijacking. First, the export FAC AAXV has been consistently persistent in the DLLs. Next, each DLL contains the PE binary section _randomX. This section appears unique in two cryptocurrency mining payloads because it houses the randomX proof-of-work algorithm that XMR rig may use. The network connections made for mining usually involve a nanopool.org domain. So they're mining nano? Huh. That's weird. Or it's for nanopool.org. We made the assessment that the payload was actually XMR rig based on several pieces of evidence. First, there were multiple references to XMR rig, including version numbers in the binary strings. These were accompanied by clear text references to command line options common to XMR rig. Coin, donate level, max CPU usage, CPU priority, and log file. The final piece of evidence came from a text log written to disk by some versions of the miner DLL. In the text logs, identifying information for XMR rig was output alongside hardware details for the victim system. Let's see, all kinds of details. Interesting. Each payload comes compiled with a standard list of commonly used Monero mining domains alongside a Monero wallet address. So far, we've identified 2 wallet addresses used by Blue Mockingbird that are in active circulation. Due to the private nature of Monero, we cannot see the balance of these wallets to estimate their success. We've seen mining payloads compiled as early as December of 2019 and as recently as late April 2020. In each compilation, one of the 2 wallets has been embedded into the binary. The wallet addresses could be extracted from the binaries easily in earlier versions using a simple strings command. In newer versions, the string is obfuscated. Even with string obfuscation in the binary, you can observe the wallet addresses in the network traffic. During execution of the miner DLLs, unique information is passed in clear text across TCP strings. We recommend the following analytics. The processes cmd.exe with command line including sc and config, and where CPL support e.ell. Any process where command line includes -t and -c and -l with network connections from 127.0.0.1 and to 127.0.0.1 on port TCP 135, juicy potato. Processes schedule tasks.exe with command line including /create and sc space start space WER were CPL support. Processes rundll.exe with command line including fac AAXV. Processes regserver32.exe with command line including /s and having an external network connection. Processes wmic.exe with command line including create and core_profiler. Processes cmd.exe and parent process is services.exe. For mitigations, focus on patching web servers, web applications, and dependencies of the applications. Most of the techniques used by Blue Mockingbird will bypass whitelisting technologies, so the best route will be to inhibit initial access. Consider establishing a baseline of Windows scheduled tasks in your environment to know what is normal across your enterprise. Let's collaborate. If you've been tracking similar activity, we'd love to hear from you and collaborate. Contact blog@redcanary.com with any observations or questions. Hell yeah. So that's really interesting. That's on redcanary.com, and it's blog/Blue Mockingbird Blue-Mockingbird-crypto miner. Yeah. But yeah, watch out for this shit. This is watch out for your own bunghole kind of stuff, man. I mean, it could just as easily be cryptojacking your miner. I mean, through your browser right now. You know, they've been getting ever more sophisticated about gaining control of systems and abusing them to mine cryptocurrencies for themselves at your disadvantage. But yeah, so let's go ahead and throw back down with some music. And where to go? You know, I've been on this Vola kick lately, and I think this is as good a time as any to throw it down in Mazes by Vola here on Coin Metal. And that was Textures with New Horizons. And I do believe that is exactly what we're looking at with crypto. New horizons. New horizons indeed. And you know, it's funny is I think it's like a product of habit. That some people are trying to reform in crypto what previously existed within legacy systems. And the problem with that is that the two are not really compatible. They can exist on a peripheral layer, meaning that we can interface with them where the retail market exists, where we're exchanging one thing for another. Like, say that you manufacture something, and all of the components for the thing you manufacture, you happen to purchase with cryptocurrency. But when you finish manufacture of it, and you sell it for both cryptocurrency and fiat currency. You've now become a vehicle between, and dependent on neither. And this is where I really see that things are going to happen. You know, all these people trying to create little garden parties for themselves and little boxes where you can transact for shit for their fucking token that you buy with regular US dollars or cryptocurrency. No. It's a whole box of shit that I don't need to live in. Why am I going to do that? The practicality of it is zero, and it includes a whole bunch of technical debt and bullshit that I don't have to deal with if I don't have to. Why am I going to invite myself into that box of shit? I'm not going to. And anybody telling you that they will, they're silly. People that are commercially motivated to tell you that kind of thing. So again, watch out for your own bunghole. This shit is meant to operate on a peer-to-peer basis. If you cannot do it on a peer-to-peer basis, it is not crypto. Simple as that. And it is with that I'd like to bring this episode to a close. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, of course I have not picked one out. But I've got one in front of me here I think is pretty appropriate to this situation. Pantera, A New Level, here on Coin Metal Last Dance. Thank you again for listening, and y'all have an excellent evening. Good night.